Hello there, this is the Bookkeeping Master on YouTube. Welcome to part 3 of this Prepayments and Accruals series. The previous 2 videos I taught the basics of prepayments and I went through some examples of prepayments. It's now time to move on to accruals. If you've joined the series here, then go back and watch from the beginning, because you will understand accruals so much better if you understand prepayments, because they're basically opposites. And I'm not going to spend as much time explaining accruals, because if you understand prepayments, then understanding accruals should be very straightforward. So in this video and the next video, I'm going to explain accruals, the what is accruals, why do we do accruals, and some examples of accruals journals, accruals calculations, basically some examples to show you how to account for accruals. As mentioned at the beginning of this series, if you don't understand basic bookkeeping, you're not going to understand prepayments and accruals. So it's really important you understand the basics and then you watch this series. This is an advanced accounting series. Okay, accruals. What are accruals? Well, let's roll back a bit and talk about prepayments. So prepayments are when we have an invoice within a reporting period, but the expense the invoice relates to is actually incurred in a future period. And that was all explained in the previous 2 videos. So an example of a prepayment could be an insurance expense. That's the example we used in the previous videos. So it could be that we receive a bill, say in March 20 whatever, for insurance for the next year. So we have to do a prepayment to move that amount out of March and spread it across the next year. The prepayment allocates the cost to the period that the expense is actually incurred by the business, the company, the entity. Any questions about that, please go back and watch the previous videos. So to summarize, a prepayment is when something is pre-invoiced, prepaid for a future period. And we just want to account for that. We want to move that expense, which is usually accounted for by invoice date, to the period the expense was actually incurred or is going to be incurred in. Now, an accrual is the opposite. Okay, so an accrual is when we have some sort of cost or expense, and sometimes it's even a sale, incurred in the reporting period, but billed after. And I use the word billed, but it doesn't necessarily have to be an invoice, because not all expenses come with an invoice. This could be interest on some sort of bank loan. It could be a direct payment from the bank. So it could be that the expense is paid after if there isn't a bill. So an accrual is needed when some sort of cost, expense or sale is incurred in the reporting period but billed after. And in this example here, let's say we are compiling a profit and loss statement for the financial year March 20 whatever. And the accounting costs for this year, our tax accountant reviews the year and bills us. She sends an invoice of 650. That could be pounds, dollars, euros, yen, it doesn't matter, after the reporting period has ended. So we're doing a profit and loss for the year March 20 whatever. But let's say that this bill actually arrives and is dated in May 20 whatever. So 2 months after the reporting period, there is a cost that relates to the reporting period. If we don't do an accrual, this accounting cost that relates to March 20 whatever is actually going to show in the next set of financial accounts, which isn't correct, because we want the expenses, the costs, to show in the periods that they were actually incurred, not the date of the invoice. Other examples of accruals could be things like wages. Sometimes the wages journals are done at the beginning of a month for wages that relate to the previous month. So in that case, you could do an accrual. And once again, going back to the whole bill thing I mentioned earlier, you don't receive a bill for wages. So this is why it's not always going to be based on invoices. It could be payments from the bank account. Other accruals could be things like subcontractor costs. A subcontractor may provide a service in March 20 whatever, but send you the invoice in April 20 whatever, the month following. So the invoice date doesn't actually match the month or the period that the expense was incurred. Let's stick with this example. Accounting 650, so accounting costs of 650, which relate to doing services for the financial year March 20 whatever, but billed in May. Now I've created this slide just to help you understand which expenses would need an accrual. So we have an invoice in May, which relates to the previous period. So this is the period end, 31st of March. An invoice in May, which relates to this financial period, this financial year, not the financial period the invoice is dated in. Now, if you're finding it hard to follow along, if this is not making sense, what I suggest you do is just stick with this series, because in the next video, I'm going to give you some examples, and it might click into place that you might have a light bulb moment as I go through the examples with you. And as mentioned in previous videos, you can also take this course on my website. It's all for free, no registration required, because there's text that you can read along with these videos, and that may help you to understand. In the next video, I will go through some examples, including the calculations, the journals, the journal reversals, just like I did with prepayments. I'm now going to do with accruals.